I have chosen Bank of America to invest in because we are trying to compare 30 best companies in the world, considering the Dow Jones Index, and that's why I'm trying to get the company that can give us the most return. And that's why, considering the current stock price of Bank of America, I have chosen Bank of America to invest in. Let's start off with a little business description. Bank of America is the second largest bank holding company and the world's largest wealth management corporations. It is one of the big four. That is, it comes under one of those which are too big to fail. That is, anytime it goes through a problem, the government will try to save them because that would produce a very big loss once they fall down. In 2008, the bank acquired Merrill Lynch, which made the bank the world's largest wealth management corporation and a major player in the investment banking area. The company had held 12.2% of all bank deposits in the United States in August 2009, and it comes after Citigroup and JP Morgan Chase, which are its main competitors as well. Next thing, management. Every time you try to invest in a company, you have to focus on the management. For example, if you put somebody like Sean Payton as the CEO of even Google, its stock price is going to fall down right away. And that's why I had considered the time to talk about the president and CEO of Bank of America, who is Brian Moynihan. Brian Moynihan is an American lawyer, businessman, and president and CEO of Bank of America. He has served at a lot of positions besides being the president and CEO of Bank of America. He started in December of 2008 inside as a general counsel for Bank of America. Well, talking about Brian Moynihan, he rocked Wall Street by unveiling a landmark settlement that takes a giant step toward finally putting the home loan mess behind Bank of America. Moynihan announced that Bank of America will pay $8.5 billion to 22 big investors, which claimed that Countrywide had misrepresented the quality of loans it sold to them. In a single stroke, he effectively removed the biggest cloud over the company's future. Next is, what has the company done under Moynihan? We all know that previously the CEO of Bank of America used to be Ken Lewis, and to tell you the truth, I think he's pretty much of a lunatic, because when he acquired all the big firms like Countrywide and Merrill Lynch, it is under the belief of a lot of analysts that the stock prices that he acquired the firms for were too high than what it should be. And well, under Moynihan, everything is trying to be improved. The company is shrinking to become a more focused, profitable franchise. And like I said before, under all the mistakes that Ken Lewis has done, Moynihan is trying to improve on all of that. When the company's assets were grown up to 2.8 trillion by the acquisitions of all those big companies like Merrill Lynch and Countrywide, the market price fell from 279 billion to 54 billion, which is like 80% drop. And right now, Moynihan is trying to improve all of that. Next is the reduction in long-term debt. As you can see in the chart, the long-term debt for Bank of America is being decreased from 486 in third quarter of 2010, which is from the financial crisis of 2007, 8, 8, 9, to fourth quarter of 2012 to about 282 billion. This proves that the company is trying to improve by paying off all the bad debts and long-term debts that it's been having. Next is the financial analysis. I have considered liquidity ratio, credit ratio, weighted average cost of capital, and economic value added, DuPont analysis, and supply chain to evaluate the financial conditions the Bank of America is going through right now. Let's start off with liquidity ratio. Well, for a bank, the liquidity ratio is not a big deal because the current assets of a bank is being fluctuated very highly. Since if I were a depositor at a bank, I would be taking money out of the bank and putting it inside the bank very frequently. So in any of the reportings like Yahoo Finance or Bloomberg, you would never find a current ratio, quick ratio, and cash ratio for a bank. Well, anyway, I went ahead and took the 2012 10-K filings to calculate the current ratio, quick ratio, and cash ratio, which are 0.6216, quick ratio is 0.5381, and cash ratio is 0.2222. Well, even though these matters look below what it should be, because all of them are less than $1, they would not quite create an effect on the stock price of the bank because of the fluctuation in the depositor's money that goes inside and outside on the bank in a day. Next, top credit ratio. I have used times interest earned, total debt ratio, and debt to equity ratio to calculate the credit condition of the bank. For every dollar of interest in the bank right now has only 65 cents to pay it back off. That means it is still struggling through all the loans, all the bad debts it has taken during the financial crisis of 8-9. Similarly, total debt ratio is 30.46, which means the portion of debt related to a dollar in asset is 30.46, and the debt to equity is 284.09, which is a relatively very high number, saying that for every dollar in equity, the company has 284.09 million in debt. But this again comes back to the same financial crisis that it is going through, and it is recovering. WACC and EVA. Here I have drawn a chart to show the WACC of the bank for the past 5 years and EVA for the bank for 5 years. The weighted average cost of capital, as you see, from the recovery of 2008-9 financial crisis, it's been dropping and trying to improve. Similar to the EVA, well, the bank took a very big hit during the crisis, and now, as you can see, the EVA is gradually increasing. Even though it is negative, it is gradually increasing, which means that the bank will be producing economic profit very soon in the future. DuPont analysis. Well, I did the DuPont analysis to analyze the financial condition and return the bank is being giving. Well, as you can see, the values are tax burden 89.84, operating margin 3.68, asset turnover 0.0461, leverage ratio 10.09, profit margin 5.0256, return on asset 0.193, return on equity 1.284. All these numbers suggest that right now the bank is still struggling and still going through a recovery process that has taken a very hard hit on the bank. Next up is supply chains. Since this is a bank, it will not be considering any inventory or raw materials to make up the products that it is going to sell. So supply chain is not a big deal in terms of a bank. Anyway, I put some the data from Bloomberg to show you what the supply chain is showing. All I can see is a bunch of computer software companies as a supply chain suppliers for Bank of America. And these computer systems will provide you with the new technological enforcement in their company websites, and also new improvement in technology for their ATMs and banking systems. Next up, I have used a simple measure to calculate the target price, or what the price is going to be in 2014. First of all, I calculated the price to earnings ratio, which came out to be 10.26. That means for every dollar in earnings, the price of the bank is 10.26, which indicates that it is a very good time to buy the stock because the price to earnings is very low and the stock is not inflated as of now. Similarly, the price to book is 0.573, which again signifies that this is the best time to buy the stock, as even the book value of the firm is higher than the current price that the bank is being traded at. Similarly, I used the 2014 estimated EPS and the price to earnings ratio to calculate the target price for 2014, which came out to be 13.24. This indicates 6.6% of geometric average rate of return for the current stock price of 12.42. Beta. Well, as you can see, the beta as of now is quite higher than the S&P, than any other company, probably any other company in the Dow Jones Index. It is 1.8. That is, the stock is twice as volatile as S&P market. And then again, it ties back to the same point, which is it is still struggling through the financial market. That's why I have considered the R-square in here, which is 0.542. That means the beta, the distribution shown in the graph is only 54% normally distributed. That is, there's only the probability of this happening is only 54% as compared to the market. Next up, I have considered the 2013 quarterly earnings to show how good the bank has been doing in the past year. According to the 2013 quarterly earnings, the bank had deposit balance up 5% from Q1 of quarterly 2012 to 1.1 trillion. The first lien mortgage production up 57% from Q1 of 12 to 24 billion. Global Wealth and Investment Management reports record post-merger revenue, net income, and long-term assets under management flows. Consumer credit loss rates reaching 5-year lows. Commercial loan balance is up 17% from first quarter of 2012 to 367 billion. It maintains number 2 ranking in Global Investment Bank, up 26% from first quarter of 2012 to 1.5 billion. Non-interest expense down nearly 1 billion from first quarter of 2012, driven primarily by Project New BSE initiatives. Significant progress in legacy assets and servicing. Number of 60 plus as delinquent mortgage loans down 39% from first quarter of 2012 to 667,000 loans. And besides these numerical values, the capital and liquidity remains strong as Basel I with market risk final rule Tier 1 common capital ratio of 10.58% up from pro forma 10.38% in the prior quarter. A long-term debt down 75.3 billion from year ago quarter, driven by maturities and liability management actions. Time to required funding remains strong at 30 months. 2013 capital plan action expected to begin at the second quarter of 2013. Approved actions include 5.5 billion of preferred stock redemptions and 5 billion of common stock repurchases. As you can see from the slide, it has a net income of 2.6 billion or 20 cents per diluted share in 2013 first quarter compared to 653 million or 0.03 per diluted share in the first quarter of 2012. That clearly indicates the bank has been doing way better than what it did in 2012, but it is still struggling through the crisis. Now, I have used price to book ratio to compare Bank of America with couple other Dow 30 companies, and from this chart you see that the price to book ratio for Bank of America is the lowest out of all Dow 30 companies. That signifies that this is the best time to buy as much stock for Bank of America as you can. And being in one of the Dow 30 companies, it tells you that the company will go ahead and get into the right track of returning profits, and then the stock price will be higher or be what it should be. I am trying to compare Bank of America with there's other companies, and there's only one banking company in here or financially related company, which is American Express, and it shows that Bank of America is better to be bought right now than American Express. Then again, I have went ahead and compared the leverage or how much the debt the company is taking with other Dow 30 companies, and in this comparison, the two related companies that is work in the financial industry would be JP Morgan Chase and American Express. And as you can see, since a bank always has a high leverage ratio because they deal with all the money and stuff, you can see that Bank of America has lower leverage than its competitor JP Morgan Chase. And on the other hand, American Express has lower leverage than Bank of America and JP Morgan Chase as well. But still, I'm going with Bank of America to invest in. Now, I have tried to compare the return on asset and return on equity of the three banking institutions inside the Dow 30, which are American Express, JP Morgan Chase, and Bank of America. Well, right now, the best performing company is American Express, and followed by JP Morgan Chase and Bank of America. And this struggle might not look very good as a current investment, but if the bank goes through this struggle and goes back to its track of returning profits, it will produce good results. The current data might not look good for this company, but this provides a platform for you to invest in so that you can get the highest return possible. I went ahead and also drew the efficient frontier with return as 5-year average return on equity and the standard deviation of return on equity of those 5-year averages as risk. And as you see, Bank of America lies in the bottom, the one that says 1.567 and risk with 0.009. That is Bank of America. It does lie in the aviation frontier. Well, even though it gives the lowest return on lowest profit, just because of those prices. Now, another point for me to consider was Warren Buffett investing in Bank of America. That is a big deal. I mean, when he did invest in Bank of America, that's when the stock price, I think, doubled or gained a lot of value. Warren Buffett has decided to invest $5 billion in Bank of America. But then again, one more thing for you to consider is that Warren Buffett is investing in preferred stock that pay a 6% preferred dividends. That is, he comes before all of us. But aside all of that, since the fact that Warren Buffett is investing in Bank of America gives you a signal that it is a strong investment company and it will provide strong returns. Conclusion. Well, first thing to consider for Bank of America is it has been hit hard from the financial crisis of 2008 and 2009. That is the crisis when it took away Lehman Brothers, and Bank of America took over Merrill Lynch, and the Federal Reserve tried to bail out all of these banks, and to tell you the truth, all of these banks are still working at a recovery mode to get out of all of the toxic assets they have on their balance sheets right now. And as soon as they get rid of all those toxic assets, those toxic loans, and those toxic mortgages, it will go back on this track of profit. Deflated stock price after crisis. The fact that a stock price is deflated after crisis gives you the opportunity to invest in so that you can get the highest return possible from this investment. That is, if you're investing in a stock right now that already has a high value, like $40, $50, or $70, like other stocks of Dow Jones, they will not grow to give you the high return that you want in your investment. Like a stock with $45 of stock price might go up until $50. That gives you like $5 in return for every stock that you buy. The stock price of Bank of America as of yesterday was 12.42. The book value of the stock is $20. So even if it gets at least until the book value, that will give you $8 of return per share. To consider how good of a company or how good of a banking institution Bank of America is itself, I have put the point that it is the pioneer to offer to deposit money at the ATM. Right now, as you are depositing money in your ATM machine, this is the company that started that tradition and is now being followed by every other bank in the nation. And last thing, but the most important thing, is that stock of Bank of America is relatively cheap for the time being. Those who want to make the most money on it need to act as quickly as possible. Make sure that you work to purchase up as much as the stock as you can today. So if you buy when it's cheap, that's when you get the most amount of return.